Okay. Good morning, guys. Good morning, everyone. So, next day of 101. Just give me a second. Yeah. Fine. So, in the previous session, what all did we check was what do we mean by Ind AS 101 transition? What do we understand by first Ind AS financial statements? Then we saw the meaning of previous gap. And then what do you exactly mean by the transition date? So these were the three major things that we saw. We also saw that on the date of transition, in fact, you will be having three balance sheets, current year, comparatives, as well as the balance sheet as on the beginning of the earliest reported period. So if I'm preparing a comparative for the previous year, the balance sheet as on the first day of the previous year also will require to be presented. Then we saw that any adjustments on account of transition will not be routed through the statement of profit and loss. Rather, it will be routed through the retained earnings or any reserve if it is available. Okay. So that we will see in the coming discussions. Okay. So that is something which we have already seen. So when I do my transition to 101, broadly I'll be having four things that happen. The first one is derecognizing items in Ind AS which were earlier recognized. So that is the first point. Second point is recognition of items which were earlier derecognized in Ind AS. Third one is reclassification. Fourth one is remeasurement. So these are the four critical things that we will be doing under Ind AS 101. We saw a couple of problems and then we moved on to the first set of transition guidelines, that is stock options. In stock options, we broadly categorized it into three heads. The first one is as on the date of transition, that is, I'm talking about this one. As on the date of transition, the vesting also is done, the exercise also is over. So basically, the option tenure has expired. That means under the previous gap, I would have employee benefit expense account debit to stock options outstanding. This would be completed. Then stock options outstanding account debit to share capital, securities premium, as the case may be. So the stock option outstanding also would be eliminated because either the stocks would have been, the options would have been exercised, or alternatively, the options would have lapsed because the tenure of the ESOPs is completed. So because of this, there is no transition impact in respect of case one, and everybody had confirmed that they had understood this. Coming to case number two, on the date of transition, the vesting is completed, but the exercise period is going on. So this is the second case where vesting is over. So any expenses that had to be booked have already been booked, and third, have already been booked, but the exercise period is still continuing. The exercise period is still continuing. So in that case, we saw that. In that case, I think we saw this, okay, but we did not make a note. Okay. So, anyways, let us now do options 2 and 3 briefly, and then you will be able to understand. Okay, so there is no major issue in that. Okay, see, when I talk about stock options under the accounting standard regime, there was no standard. It was based on the institute's guidance note, and there the employee benefit expense was calculated on the basis of something known as intrinsic value. Which value? Intrinsic value. What is intrinsic value? The difference between the market price and exercise price on that date would be your intrinsic value. And this intrinsic value would be the basis for booking of the employee benefit expense. So this was what was the situation. So every time they would pass the entry employee benefit expense account debit to stock options outstanding. This would be at which value? This would be under the AS regime at intrinsic value. Okay. But Ind AS regime does not recognize intrinsic value. What is intrinsic value? Intrinsic value is essentially the value as on that date. Intrinsic value is the value as on that date. It is not a futuristic value. It is a value that is existing as on the date based on the market conditions on that date. But options are never exercised depending on the market option that is there on the date, depending on the market conditions prevailing on the date of grant of options. Stock options are exercised in the future. Stock options are exercised in the future. And therefore, we need a futuristic value. We need a futuristic value, which is why Ind AS tells us that beta, you cannot take intrinsic value. You will be taking under the Ind AS regime. कौन सा value लोगे आप? Sir, we will be taking the fair value. We will be taking the fair value. Okay, तो हमने fair value ले लिया. Now, will intrinsic value and fair value be the same? Answer is no, definitely not. And therefore, this becomes a transition impact. This becomes a transition impact. Which account is getting affected? The P&L side, it is the employee benefit expenses that is getting affected. So now, with this understanding, let us come to case 2. Let us come to case 2. Cases are written there. So if I come to case 2, let us now understand. What is case 2? On date of transition, vesting is completed, exercising is ongoing. ये खत्म नहीं हुआ है. Exercise of options is ongoing. Now you tell me, since you are all familiar with Ind AS 102 by now, since you are also familiar with this, what was done under the earlier regime, I want you guys to answer on the date of transition. On the date of transition, will I have any further booking of expenses? On the date of transition, will I have any further expenses, any further employee benefit expenses to be booked? Yes, good morning. Good morning, Dev, Mansha, Satish, Shruti, Shailesh, Viraj. Good morning. Yeah. Namrata is not there. Shankar is not there. Yes, Prashant, good morning. Yeah, there is no further employee benefit expenses to be booked. And that is why Ind AS gives you a transitory guidance. Ind AS gives you a transition guidance. Continue with previous gap carrying value for SBP reserve or what I have written as stock options outstanding. Stock options outstanding account. Don't make any change to that. ऐसे भी there is no expense that will be booked after the transition and therefore कुछ ज्यादा फर्क नहीं पड़ता. You can go ahead and take the take the SBP reserve value as it is into the Ind AS balance sheet. उठा के रख दो balance sheet में. Good morning, Mohammed. Good morning. Okay. So therefore, this is an option which is given. There may be some companies, नहीं, we are doing a transition, तो हमें अच्छे से transition करना है. We want to do 100% transition. So for those people, the standard says or restate to fair value if if intended by the entity. By the entity. In most of the cases, you will see that transitionary relief or transition ease or transitionary guidance, which simplifies your treatment on transition, is optional in nature. You are always going to be given the other impact, that is the more rigorous impact, and the transition impact is the transitionary relief provision is an option. You can choose whatever you want. Obviously, what do you think entities will do in this case? Sir, in this case, entities will obviously prefer the simple one now. If I have to restate the fair value, I have to go back 7-8 years whenever it was issued. उस दिन का assumptions, that day's value, I will have to determine. I will have to call up options valuation expert. I will have to give him all the data that was there at that point of time, and then he will do a fair valuation. He will do a fair valuation exercise. He will give me a particular fair value, and that whole process I will have to carry on till the current period, because there would be expense booking, then partially exercised, and what will be the SBP reserve as on date. So all this exercise, you will have to do it in the background. And with all this, you know what is going to happen? Only two things will change. Retained earnings will change. SBP reserve will change. You are just moving the money from one reserve to another reserve. If obviously the second reserve will end with the options getting exercised. And suppose, let me add a little more to it. If these options do not get exercised, you took the entry retained earnings to SBP reserve for any change in the fair value. If these remaining options go unexercised, you will again do the reverse entry SBP reserve account debit to retained earnings. So basically, you are not achieving anything major by transitioning to fair value, except that academically you can beat around saying that I have 100% done a transition. So therefore, most of the entities will go ahead with this option. But anyways, it is the choice of the entity. So case number 2, I presume it is clear to all. Coming to case number 3. Coming to case number 3 on date of transition. Vesting is over, answer is no. Vesting ongoing. Obviously, if options have not vested, will exercising be possible? Answer is no. Not applicable, as not yet vested. As not yet vested. Now you tell me, should you have a transition relief to this or not? You have understood. Stock options were issued before. Vesting period abhi bhi chal raha hai. Vesting is still there. So expense needs to be booked again in the future. And therefore, you tell me whether I will opt for it, whether the standard would give me a transition relief, or will it say, no, 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 you have to take the fair value only. What do you think? What do you think? Come on. I have given you the logic for option 2. You tell me for option 3. Remember, in option 3, employee benefit expense will be booked in Ind AS regime also, because options have not yet vested. In Ind AS regime, in respect of this, the options, the employee benefit expense will still be incurred. Okay. So now you tell me, you are aware of the fact that AS regime had uh, AS regime had intrinsic value. Ind AS regime requires fair value. बीच में मेरा transition हो रहा है, expense is still to be booked. So if I have to put a timeline for you, this is the date options issued. This is your transition date. And this is vesting date. Options issued or what we call as the grant date. And after this, you will be having exercise. Now, in this, employee benefit expenses would be booked on intrinsic value. Sir, why intrinsic value? This is because it was under the AS regime. AS regime. After the transition date, we are under Ind AS regime. Okay. It is very easy for me to ask you to by heart, but if you know the reasoning why a particular transition is there or not there, a relief is there or not there, then there is no need for you to by heart, you can understand. Now, Ind AS regime, we look at Ind AS 102, and this requires fair value for employee benefit expenses. So now my question to you is, will a transition relief be provided by Ind AS 101 in the third case, or will there be no transition relief provided? I haven't yet given the answer. I want you to think logically and answer. Will a transition relief be provided in this case on the transition date, like how we had in option 2? Sir, SBP reserve, whatever is there, you take that and proceed. Will that relief be given in case 3 or not? Answer me. Prashant has given, Shailesh has given. Others, please answer. Please answer. Good morning, Tanisha. Good morning. Yes, Mohammed, please tell Viraj, Shailesh, Satish, Shruti, what do you think? Yes. 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 Good. Good. Good morning, Namrata. Good morning. Okay, so case 3. Will a relief be provided or not is the question. I got only 3 answers. Okay. Okay. Some people are saying should be provided. Some people are saying should not be provided. Okay. All right. Fine. Good. Let us understand. Let us understand, and you will only then understand who is wrong and who is right. AS regime, I would have passed the entry EB account debit to SBP reserve. That means SBP reserve at intrinsic value. SBP reserve at intrinsic value. Ind AS regime, because options have not yet vested, EBE debit to SBP reserve. This is at fair value. Now, what is this fair value? कौन से दिन का fair value देखते हैं आप? You tell me. Ind AS 102 you have studied. Which fair value do you take? Fair value on the grant date, fair value on the transition date, or do you revise the fair value year after year, year after year? Do you do that for stock options? Which fair value do you take? Which fair value do you take? Forget 101. Ind AS 102 की बात करते हैं. Let us talk about Ind AS 102. Ind AS 102, which fair value do you take? Do you take the fair value on the grant date for stock options? Do you take fair value in any other date? Or do you revise the fair value year after year and take the impact? What do you think? Come on, tell me. Fair value on the grant date. Exactly. You take fair value on the grant date. But in this case, इंडेस जब ऑप्शंस ग्रांट हुए थे दैट टाइम देयर वाज नो ग्रांट दैट टाइम देयर वाज नो इंडेस I mean to say, when I am moving to Indes, the options were already granted under a previous regime. The options were already granted under a previous regime. That previous regime allowed you to take intrinsic value. But today, the Ind AS regime says no intrinsic value, you have to take fair value. And if I have to take fair value, that SBP reserve balance, which is there on the date of transition, waiting to come into the Ind AS books, that is at intrinsic value. It is not at fair value. And therefore, if the guidance is going to if Ind AS 101 gives me a transitionary relief in case 3 also, what will happen is expenses will continue to be booked at intrinsic value for the period prior to transition, and after the transition you will take a half baked fair value. अब कौन सा fair value लोगे? Sir, I will take fair value on grant debt. But sir, abhi you told me Ind AS 101, if it gives me a relief, then I'll continue with intrinsic value. That means if there is a transitionary relief provided in case 3, we will end up violating Ind AS 102 because we are not taking employee benefit expenses on the basis of fair value on the grant date. And therefore, in case 3, it does not make sense to give any transitionary relief. Why? Because expenses are still pending to be booked. And because expenses are still pending to be booked, it does not make sense to give a transitionary relief on the date of transition. Ind AS 101 categorically tells us that you have to do the fair valuation exercise and determine the fair value on which date? On the grant date. You have to go in the past. You have to go in the past, calculate the fair value on the grant date, and then you will have to restate the SBP reserve. You will have to then restate the SBP reserve on the date of transition. And moving forward, you will have to recognize the expense based on the fair value at the grant date, based on the fair value on the grant date. Are we clear with this? Yes, are we clear? You will be booking the expenses after the transition date, and therefore no transition relief will be provided. You are going to restate the SBP reserve. You are going to restate the SBP reserve to the fair value, and then you recognize the EBE over the balance period. Are we clear with this? Yes. Any doubts? Is ESOP totally clear? Yes. ESOP में कोई problem, कोई समस्या, कोई दिक्कत, कोई तकलीफ? Yes. Namrata, did you follow last class? I believe you said that option 3 was not so very clear. So therefore, is it okay now? Yes. All right. Shailesh has confirmed. Satish has confirmed. Shruti, Tanisha. Yes. What about Mohammed? Anyways, they had given. Prashant had given. Yes. All right. Good. Okay. All right. Last case, please summarize. Okay. So therefore, let me put the whole thing into 3 brackets. First one, this is ESOP. First case. On the date of transition, options have vested, options have been exercised also. So SBP reserve won't be there. So therefore, case 1, no transition impact. Case 2, on the date of transition, options have vested. That means employee benefit expenses have already been recognized under the earlier regime, and therefore no further employee benefit expense need to be recognized in the future. So in this case, there is a transitionary relief which is given. That is the SBP reserve carrying amount as per the previous cap, which would generally be the intrinsic value. You just bring that forward into Ind AS regime and knock it off. based on the exercising or lapse as the case may be. This is the transitionary relief, which is optional. Alternatively, you could go ahead and do a restatement of fair value of that SBP reserve from the grant date, take the impact in the retained earnings, and in the future, when it gets exercised, you will start to utilize that SBP reserve and close it and transfer it to share capital and the premium if needed, as the case may be. In the third case, options have not yet vested on the date of transition. So employee benefit expense needs to be booked in the future. And because employee benefit expense needs to be booked in the future, Ind AS regime requires it to be booked at the fair value on the grant date. But the existing SBP reserve is at the intrinsic value under the previous ICAI regime. And therefore, there is no transition relief provided here. You have to mandatorily find out the fair value on the grant date, restate your SBP reserve, and after you restate your SBP reserve, you will go forward and take the entry on the transition date, restating the SBP reserve, and in the future, you will recognize the employee benefit expenses based on the fair value as on the grant date, which you had calculated for the purposes of transition. So these are the three treatments that you are having, three cases that you are having for your employees' stock options. Okay, so that clears the first one. Okay, Namrata, I hope it was fine. So coming to our study material, coming to our study mat, yes. Come to illustration 7. Okay, yes. You will tell me the answer. Okay. X is a first time. Don't look at the solution. Okay. X Limited is a first time adopter of Ind AS. The date of transition is April 1. It has given 200 stock options to its employees. Out of these options, 75 have vested on November 30th to 20x0. That means before transition. And the remaining 125 will vest on November 30, 20x1. What are the options available to X at the date of transition? What are the options available to X at the date of transition? Bolo. 75 options vested, exercise pending. 125 options not yet vested on the date of transition. What are the options available? Don't even look at the solution. You should be able to tell me by now. 75 options. कौन सा केस नंबर? केस 1 in our example or case 2 or case 3? कौन से केस में आता है? And just tell me the answer in brief. Fair value, no impact, or fair value or transitionary relief. 75 options, 125 options. 75 options come under which case? Do they come under case 2, case 1, or case 3? 125 options come under which case? Case 2, case 1, or case 3? Bolo. Yes. You tell me the case also, I am fine. I will assume that you will know the treatment. Okay. Yes, that's right. 75 options, case 2. 125 options, case 3. 125 options, case 3. Yes. So 75 options already vested. This is case 2. It is not yet exercised. Case 1 was vested, exercised. Both happened before transition. तो वो तो है ही नहीं हमारे बुक्स में. Case 2, vesting is done. Exercise will happen later. So here you are given options as previous gap value or fair value at grant date. At grant date. So this is something that we will have to do. 125 options, it is yet to vest. It is yes, yet to vest. So therefore, restate to fair value on grant date. Okay, fair enough. Everybody understood? Yes, excellent. Shruti, Namrata, yes, absolutely right. So you identify the case. The case will then guide you in telling what should be the options, what should be the solution. So what are the options available to X? In respect of 75 stock options, you can either take the previous gap value or the fair value at the grant date. And in respect of the 125 options, you have to determine the fair value at the grant date and do the treatment. Okay. All right. All right. So this you can go through it. They have used a little more detailed language. Okay. But again, you can use the simple language also and get your answer. Okay. All right. So this is done. Shall we proceed further? Are we clear with ESOPs? Yes. Are we clear with ESOPs? Anybody has any doubt? All clear, guys? Confirm? Okay. ठीक है. So second one, foreign exchange. Second one is foreign exchange. Okay. Foreign exchange is pretty, I won't say complex, is pretty interesting. Okay. Provided you know AS11. How many of us remember AS11? Namrata, is it clear, beta? Yes. All right. How many of us recollect AS11? याद है थोड़ा बहुत AS11? There were two paragraphs. कभी आपको शायद याद आएगा. If I write it. Para 46, para 46A. Okay. Only the name. Yes. Okay. Fine. Good. Honest. Okay. All right. Fine. So now we have basically two broad changes on account of this Ind AS 101. So that is something which we will now check and then let us move forward. Okay. So there were two paras, para 46, para 46A. थोड़ा सा हम AS11 पढ़ेंगे. We will study AS11 a little bit. And once we understand what used to happen under AS11, आपने इंड एस 21 पढ़ा है. यू हैव स्टडीड इंड एस 21. इंड एस 21 तो याद होना चाहिए. ये तो अभी आउट, वो आउट ऑफ कोर्स हो गया. AS11 इज आउट ऑफ कोर्स. दैट आई विल रिफ्रेश यू. इंड एस 21 वेरी मच इन द कोर्स है. सो आई होप यू रिकलेक्ट इट. ओके. So para 46 and 46A came somewhere in 2010-11. Okay, came somewhere in 2010-2011. Not recollecting the exact dates, but para 46, 46A, why I remember is because this was the time when it was introduced just before our examination, when we were answering CA final. So that is why this is a very vivid paragraph which we remember. So now what had happened in 10-11 was there was a very violent surge in exchange rates. There was a very immense surge in exchange rates. Matlab, it kind of created an upheaval in the currency markets because the dollar, which was trading at 45, would suddenly moved on to 65 to 70 at that point of time, that phase. Now, para 46, 46A were not there. तो तभी क्या होता था? What used to happen was AS11 monetary items restated at closing rate. There would be a huge hit to the profit and loss. There would be a huge hit to the profit and loss account because of this violent change in exchange rates. And therefore, companies went to the Ministry of Corporate Affairs and then they said that, look, boss, this is something which is not in our control because it is on market factors that are prevailing at that point of time. So therefore, you have to help us. You have to help us. So what the Ministry of Corporate Affairs did is it came out with para 46, 46A. Ordinarily, you have to take the forex gains or losses to the P&L. So forex gain or loss on long-term monetary items. That is basically a decent way of saying loans. This is not applicable to creditors, etc., etc. Okay. If in the case of short duration, you see such a violent upsurge, then probably something is wrong with the very currency in which you operate. Okay. This you generally tend to see in cases like Zimbabwe, these African countries where inflationary is hyper. Okay. So uske liye standard is altogether different. That deals with Ind AS 29, I suppose, that deals with accounting for hyperinflationary economies. So that is a separate ball game altogether. Here we are focusing only on the long-term monetary items, which is basically your long-term loans. So the forex gain or losses, could go either of the two cases. Option one. This was what was there earlier also. So option one, the forex gain or loss on long-term monetary items, this would go to the P&L. This would go to the P&L account, which was what every monetary item would go to, which is where every monetary item would go to. So option one. But because the surge was very violent, these paras were brought into existence. Option two. Para 46A. Para 46A. This para 46A gave us two options. Depending on what was the reason for taking the loan. General loan, that is the first one. Second one is loan related to a depreciable asset. Loan related to a depreciable asset. So if it was a general loan, कोई asset वैसेट के लिए नहीं लिया था, it was a normal loan that was taken, then the forex fluctuations that happened around that time, you would accumulate forex gain or losses in special account, which is FCM ITDA. FCMITDA. Are we able to recollect this FCMITDA account? Yes. Yes. Are you able to recollect this? कुछ याद आ रहा है? What is FCMITDA? Foreign currency monetary item translation difference account. इतना तो फील्ड स्पेस भी नहीं होता हमारे सिस्टम में लिखने के लिए. फॉरेन करेंसी मॉनेटरी आइटम ट्रांसलेशन डिफरेंस अकाउंट. सो देयरफॉर FCMITDA. The difference is I would accumulate these differences, and all these differences would go and sit in FCMI TDA. And I would amortize this over the loan tenure. Okay. Defer gain or loss over loan tenure instead of hit in first year to P&L. Instead of hit in first year to P&L. Are we clear with this? Yes. Instead of hitting first year to the P&L. Okay. So what we used to do was we used to capture this into the FCMI TDA account, and the FCMI TDA account, I would then amortize it or spread it over the tenure of the loan. So the sudden impact in forex gains or losses, I would take it into my the sudden impact I would take it into my uh, I would not take it into my P&L. I would spread it over the loan tenure. I would spread it over the loan tenure. Are we clear with this? Yes. Are we clear with this? Any doubts so far? ये स्टैंडर्ड नहीं है. This is something which you are supposed to remember, something which you have already studied. Okay, so this is the first part. The second part was, sir, I have taken this loan to acquire a depreciable asset. I have taken this loan to acquire a depreciable asset. So what I would do, accumulate forex gain or loss in property, plant, and equipment. That is capitalize. Gets forex gain or loss, gets depreciated over life of the asset. Are we clear with this? Yes. You remember this first of all. और अगर याद नहीं है तो अभी थोड़ा बहुत आर यू एबल टू मेक सेंस आउट ऑफ दिस? यस. यस. All right. Now, this option of accumulating in FCMI TDA or asset, okay. Basically, option 2 was an irrevocable choice. This was an irrevocable choice. मतलब once I decide to accumulate it into my property, plant and equipment or FCMI TDA, it was irrevocable. एक बार मैंने जो डिसाइड कर लिया तो कर लिया. I cannot go back on those words. Okay. I decide to accumulate, you have to accumulate. सर 2010 की बात है, किसको पता इंडेस आने वाला है? Who knew इंडेस would come? But ultimately, one day INDES came and landed on our laps. So INDES came and you have read INDES 21. अब बताओ, is there any such clause in INDES 21? 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 Have you studied Ind AS 21? No, there is no clause. There is no clause. So Ind AS 21 requires forex gain or loss वो कितना भी violent हो, whatever be the surge or down this thing, whatever be the impact, it has to go to the P&L. There is no other alternative that is given to you. So Ind AS 21 or IFRS has no such clause. That is only option 1 available. That is, take forex differences to P&L only. To P&L only. Okay? To P&L only. Apart from this, foreign exchange gains or losses, you cannot. You cannot. अब हो गया conflict. Sir, कैसे conflict? You gave us an irrevocable choice and we had taken that irrevocable choice. That means सरकार को आप बोलोगे, you can tell the Ministry of Corporate Affairs, you gave us an irrevocable choice and now you are only revoking it. ये क्या? What is this? Then what is the meaning of irrevocable? So nothing is irrevocable, but still the companies question that irrevocable choice है. So how are you revoking it? We are already still having the tenure of the loan. We are still having the tenure of the property, plant and equipment for amortization. So now what are you going to do? So therefore, we are having the following transition guidance, which is given. We are having the following transition guidance. This is conflict with AS 11. The basic bone of contention is the irrevocable nature of the option. The irrevocable nature of the option. So now, in respect of this, we have a transition provision. Existing loan, transition provision. Existing loan, if FCMI TDA option availed, asset की बात हम बाद में करेंगे. If FCMI TDA option was availed, that is, you had opted for the second option, then continue accumulating gains or losses in FCMI TDA on date of transition and even thereafter. Even thereafter. This is carved out from IFRS. That means from IFRS 1, this is a carve out that we are having. Are we clear with this? Yes. So existing loan hai, we had opted for FCMI TDA. In respect of existing loan, I will continue to accumulate the differences in FCMI TDA and amortize over the tenure of the loan. No second thoughts about it. No doubt about it. But fresh loan ke liye, can I do this? Answer is no. This is only a transitionary relief. That means loan was taken in the previous regime. Along with the loan, you had taken option 2 to accumulate differences in FCMI TDA. Now the transition has happened. Loan balance is still existing and therefore in respect of the existing loan balance, I had taken an irrevocable option to accumulate the forex gains or losses in FCMI TDA account. Because of transition, that irrevocable nature cannot be revoked, and therefore the Ind AS 101 standard has given us a transitionary relief, saying that in respect of an existing loan where you have availed option 2, you can continue to book this in the FCMI TDA account, and when you book it in the FCMI TDA account, even in the Ind AS regime, book it there and amortize it. That is okay. That is acceptable. That is fine. Okay, no doubt. All right, is it okay? Have you understood? But for a new loan, you cannot go for FCMI TDA. A new loan means after the date of transition. After date of transition, तो आप Ind AS हो गए. You have changed your reporting. You are into Ind AS. So how can you still have FCMI TDA? नहीं हो सकता. It's not required. Okay. You have to take it at whatever value, take it to the profit and loss account on account of foreign exchange gains or losses. Are we clear with this? Yes. Are we clear? Okay. So therefore, acha, now students will have a question. Sir, a transitionary provision of continuing with FCMI TDA, is it optional or is it mandatory? It is optional. It is optional. See, many times what this is, in fact, when you transit to Ind AS from AS, this is the best opportunity in the life of any entity to clean up its past sins. Okay, जो पुराने पाप बैठे हैं आपके बुक्स में, वो सब धोने का ये बेस्ट टाइम है. ओके, दिस इज लाइक प्योर वाटर. You just rush, you just run whatever you want to run through this transition phase. All your previous sins, you put it in opening reserves and close it off. And that is that. Okay. So transition case mein, this is the greatest advantage. So now let us just put it in a chart. Let us just put it in a chart. Okay. You can note this down. Forex gain or loss. Option 2. Availed under previous cap. Option 2, availed under previous cap. Existing loan, new loans. So let us presume date of transition 1/4/22. Existing loan 1/4/2010. 30 years tenure. A. Continue with the previous cap treatment, that is FCMI TDA, or B. You can say छोड़ो हटाओ, अब क्या Ind AS, I mean कब क्या FCMI TDA करेंगे? Ind AS 21 P&L over balance tenure. Over balance tenure. So this is something which is given. New loan, suppose you have taken a new borrowing 1/4/2023 after the date of transition, taken after after date of transition follow only in days 21. No FCMI TDA option permitted. Are we clear with this? Yes. Are we clear with this? Anybody has any doubts, any difficulties so far? Yes. Sir, but FCMI TDA was an option or a mandatory requirement? Sir, option tha. You could always have availed the default choice of taking the hit in your P&L. Sir, एक बार का hit है, ले लेते हैं, because कौन FCMI TDA open करेगा, loan tenure देखो, and then every year, every month you have to amortize it. Why every month? Your monthly reporting is there, you have to show that amortization into the P&L. Who will do all that? एक बार का hit है, ले लेते हैं, we can tell the shareholders this is because of the violent upsurge in my exchange rates, so that is why the exchange loss is so high this year. एक बार में समझा के खत्म हो जाएगा. Every time we need not explain this. Okay, so where those entities, option 1 was selected, option 1 selected under previous cap, that is gain or loss to P&L. Gain or loss to P&L. If that is the case, then do you have an FCMI TDA? Answer is no. So therefore, existing loan, any forex movements, take it to the P&L. New loan also, take it to the P&L. So there is only one option for existing or the new loan, that is take it to the P&L. Existing or new loans, कुछ भी हो, take forex gain or loss to P&L only, as option 1 was selected. Allowed to continue such option. Basically, option 2, option 1 is basically, option 1 and Ind AS 21 is essentially the same. That means forex movements, take it to the P&L, be done with it. No FCMI TDA, no asset, etc., etc. Are we clear with this? Yes. Are we clear? Anybody has any doubts? Anybody has any doubts? Yes. Yeah, pretty clear. Forex gain or loss. All well. Okay. So now let us take a couple of permutations and combinations, and then you tell me whether it is permitted or not permitted. Previous gap, Ind AS, on date of transition. Okay. Now, previous gap, I had gone for option 1. That is, take the exchange differences to the P&L, no FCMI TDA. Ind AS regime, I would like to continue with option 1. Ind AS regime, I would like to continue with option 1. Is it allowed or not allowed? Is it allowed or not allowed? That's right, Namrata. That's right. Absolutely right. Okay. Yeah. So now tell me, option one, I had availed. That means I would take the differences to P and L. And I want to continue that option in Ind AS. I want to continue that option in Ind AS. Is it permitted? That means you also want to write off the differences to the P&L immediately in the year when the forex gain or losses happen. Is it allowed? Answer is yes. It is allowed. It is allowed. Okay. I had option one. I had availed option one earlier, but now I am saying, nahi sir, हमको option two में जाना है. That means I was under option one, taking the forex gains or losses to the P&L in the AS regime. And now I want to take my forex gains or losses to FCMI TDA in the Ind AS regime. I want to now transit from option one to option two. Is it allowed or is it not allowed? Is it allowed or not allowed? Second case. Option one earlier. Now I want to book it in FCMI TDA in Ind AS regime. Is it allowed or not allowed? Option two, not allowed. सर ऑप्शन टू तो रिकॉग्निशन ही नहीं है सर अंडर इंड एस 21. इंड एस 21 को पता ही नहीं है व्हाट इज एफसीएमआई टीडीए. इंड एस 21 इज वेरी क्लियर. Whatever be your forex gains or losses, that has only one place, and that is the profit and loss account. So option one you were there. Why do you want to change option one? Okay, you want to plan option two in the Ind AS regime. Now it is not allowed. Okay. All right. Next. Next. Sir, I had availed option two. That means I was taking exchange gains or losses to the FCMI TDA account. And I want to continue with option two under the Ind AS regime. I want to continue with option two under the Ind AS regime. Are we permitted? Are we permitted? Yes. Yes, this is allowed, but only for existing loans on date of transition. This is basically your transition release. This is basically your transition release. This is your transition release. Acha. And finally, option two you had availed, but now you say sir बहुत हो गया FCMI TDA VDA करके क्या मिला आपने? कुछ नहीं. वो it is ultimately a forex gain or loss. We want to clean up the books of all these unwanted accounts. So I want to avail option one. I will shift it. I will take now the forex gains or losses to the profit and loss account, and existing balance in FCMI TDA will move it to retained earnings. Is it permitted? Is option 2 permitted? Is option 2 permitted? Option 4 allowed. Option 4 allowed. If I could write it, I would write encouraged also. If I could write, I would write as encouraged also. Encouraged matlab you want to transit to the mainstream. Yeah? So why will Ind AS not allow? Ind AS will definitely allow. Okay. So with this, we complete the first part of uh, uh, Forex. That is FCMI TDA account. That is FCMI TDA account. Are we clear with this? Yes. Okay. I'm moving it to Ind AS 21. That means previous gap loan tha, I had taken FCMI TDA. Now the forex gain or loss on that loan from Ind AS regime onwards, I want to take it to the P&L. Do you need a retrospective requirement? Answer is no. Henceforth, आगे चल के जो कुछ भी है, you take it to P&L. The opening FCMI TDA, you charge it off against the retained earnings. You charge it off against the retained earnings. So option 4 एक बार ठीक है, all right. I think there is some difficulty. Okay. So case 4. Case 4. AS regime. You have accumulated it in FCMI TD. Okay. In AS regime, this is forex gains or losses. This is forex gains or losses. Under the Ind AS regime, forex gains or losses, you want to take it to the P&L. You want to take it to the P&L. Okay. So going forward from date of transition onwards, you will take this to the profit and loss account. But sir, what about this opening balance? This opening balance transfer to retained earnings on the date of transition. Transfer to retained earnings on the date of transition. You cannot say that you cannot take this hit to the profit and loss account. This is on convergence, on adoption that we are following this. Okay. So FCMI TDA, pull it into your retained earnings, and going forward, you book it under profit and loss account, the existing loans. Is it okay? Yes. Tanisha, did you follow? All right, fine. So that takes care of the first part, FCM ITDA. Okay. Yeah. Coming to the next part. थोड़ा सा और परेशान करेंगे आपको. Let us struggle a little bit. Okay. Under AS11, there was something known as FCTR. There was something known as FCTR. You recollect FCTR under AS11? Do you recognize FCTR under AS11? क्या था सर, कुछ याद है? Yes. Just give me a minute. Yes. Yeah. Foreign Currency Translation Reserve, FCTR. Do we remember this? Basically, if you recollect, this was with reference to integral and non-integral operations. This was with reference to integral, non-integral operations. FCTR was created under non-integral operations. Non-integral operations के अंदर we would be creating the FCTR because I would use different exchange rates for converting my non-integral operations into the reporting currency. For assets, I would use different rates. For monetary items, different rates. For reserves, I would use different rates. So that difference would create an FCTR, which would go and sit in my balance sheet when I would consolidate the non-integral operations into the reporting entity's balance sheet. So this was the concept of FCTR. Now there is no concept of integral, non-integral operations under Ind AS. There is no concept of integral, non-integral operations under Ind AS. Therefore, what do we have right now is Ind AS 21 talks about functional currency. Ind AS 21 talks about functional currency. Therefore, you have two options to do with this FCTR. First option, you restate the FCTR based on the functional currency principles that you are having. That means चाहे वो integral हो, non-integral हो, वो सब छोड़ के you have to take it as FCTR and restate the entire FCTR. So this is the first option. Or second option, you make the FCTR 0 and take it to the retained earnings. No previous gap carrying amount is allowed. So basically what happens is but under Ind AS 21, no concept of integral, non-integral operations. No concept of integral, non-integral operations. Are we clear with this? No concept. What is there is functional currency. What is there is functional currency. Okay. And when I talk about functional currency, that is Ind AS 21. So therefore, two options. Recalculate FCTR as per Ind AS 21 principles considering functional currency. Integral operations, you would have taken some other exchange rates, all at closing rates, equity at, reserves at some other rates, ऐसे convert करते थे. Whereas for the, what you can say, for the non-integral operations, you would follow different rules of conversion. Ind AS 101 tells us you cannot do that, boss. You cannot take that. If you want to have FCTR in your books, go back, look at all operations, integral, non-integral, जो भी है उस entity के अपना खुद का, okay, and do the entire restatement starting from the beginning whenever this was there to arrive at the correct FCTR in line with Ind AS 21 principles. Means basically, बेटा बहुत मेहनत करो, okay, do a lot of hard work and that lot of hard work will result in the correct FCTR as per Ind AS 21. Or the second option is reset FCTR to 0. Matlab, sir, I don't want the dust of the past to settle in the future. आज के तारीख में जो FCTR है, we will make it 0. We will make it 0. But you cannot continue with the previous gap carrying value. That is, no previous gap carrying value permitted. No previous gap carrying value permitted. Are we clear with this? Yes? समझ में आता है? Yeah. Basically, we are trying to make the convergence, I mean the adoption process, as streamlined as possible. Wherever there are gaps, we are plugging the gaps with these provisions. So I cannot continue with that FCTR. The same way I could not continue with SBP reserve where options were under vesting. Similarly, I cannot continue with this FCTR because the principles of computing FCTR were totally different. Why only non-integral? Why not integral operations? Sir, AS11 ऐसा बोलता था, हाँ, but Ind AS 21 does not say like that. So if you want to have FCTR in your books, please follow Ind AS 21 principles and restate the FCTR. नहीं तो second option है ना, you reset the FCTR to 0. Reset FCTR to 0 means when you transit, you take the entire trial balance as per AS, line by line item. For each item, you will look at the transition impact. Now, under the line by line item, one item will be FCTR. So that FCTR under Ind AS, you will make it as 0. You will make it as 0. Sir, under Ind AS 21, there is no concept of FCTR. Galat hai. There is a concept, there is a calculation of FCTR which is given, which you would have studied. Particularly when you are consolidating your subsidiary, a foreign subsidiary, into the Indian parents' books. When you are doing that consolidation, that time you will have to take that difference to FCTR. So therefore, FCTR is very much there. But integral, non-integral operations are not there under Ind AS 21. We do not segregate between integral operation hai to alag exchange rate le lo. We do not segregate saying that non-integral hai to take a different exchange rate. No, that is not there. Integral ho, non-integral ho, whatever be the operation, whether it is a branch, whether it is a subsidiary, whether it is an independent branch, you have done branch accounts, I suppose. So in the case of branch accounts, we have dependent branches and independent branches. So independent branches would take a different exchange rate. Dependent branches would take a different exchange rate. That is what is integral and non-integral operation. But Ind AS 21 tells us ऐसा कुछ भी नहीं होता है. Whether it is integral, whether it is non-integral, whether it is a subsidiary, whatever you have to do, you have to translate using the principles of Ind AS 21. And therefore, you may not get an FCTR on the branch results because branches are an extension of the head office. But you may end up getting an FCTR on account of consolidation. Definitely, you will get an FCTR. Okay. So therefore, वो मिलेगा ही आपको. Concept of FCTR नहीं है, ऐसा नहीं है. Concept of integral, non-integral operations is not there under Ind AS 21. So that is something which you will have to ignore, apply Ind AS 21 principles, recalculate the FCTR that is already appearing there, and then take that recalculated FCTR into your books. Are we clear with this? Yes. The difference between FCMITDA and FCTR is FCMITDA is in respect of only one item. How FCMITDA comes? The foreign currency monetary item translation difference account arises on account of translation of only, not translation, it arises on account of forex gain or loss on only the foreign currency long term on the what you can say, what is that word which they use, foreign currency long-term monetary item. That is a loan. That is a loan. Whereas FCTR is typically a balancing figure. When you convert your subsidiary's balance sheet from a foreign currency to the parent currency's functional currency, to the parent entity's functional currency, when you do this conversion, that time you take different rates for different items. So the trial balance which you are converting into the functional currency will not tally because you have taken different rates. That difference is what goes and sits in your FCTR. Okay? So that is the concept of FCTR. So whether it is integral or non-integral, you have to do that accounting. You have to do that calculation and taking it into your FCTR. Are we clear with this? Yes. You cannot take the previous gap carrying value. You cannot take the previous gap carrying value. समझ में आ गया अपने को? Yes. Did we understand, Namrata? Yes. All right. So with that, we close our second special adjustment, that is uh, foreign currency, foreign exchange. The third one is something which most of you will already know. Okay. Property, plant and equipment, intangible assets, investment in subsidiary, associate or joint venture in the standalone finance, in the separate financial statements. In the separate financial statements. Okay? In the separate financial statements. Yes. We will have it, Namrata. We will have that. I think we should have it in the examples. I am yet to solve all the questions myself, but I think we should have. We have some long questions there. Okay. All right. Coming to the next special transitionary provisions, that is your property, plant, equipment, or intangible assets, or investment in subsidiary, associate, or joint ventures. Okay. So that is in your separate financial statement. I'm not talking about CFS. So in this case, you are having two options. Retrospectively follow Ind AS. Retrospectively follow Ind AS. That means from that date, you will have to recognize the from the date they were acquired, you will have to assume as if Ind AS was applicable from that date and do the calculation. Matlab componentization also will come. Your regular capitalization of the cost also will come. Any major overhaul that you have to do it every 5 years or 10 years in respect of equipment, which we normally capitalize, that will also come. Provision for decommissioning, restoration of liabilities which need to be capitalized in line with Ind AS 16, read with Ind AS 37. That also needs to be done retrospectively. मतलब पुराने जमाने से you have to go to those dates, apply Ind AS, do the depreciation after that, and then arrive at the value as on the date of transition. मतलब बहुत 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 मेहनत करनी पड़ेगी. You have to do a lot of effort. Or alternatively, you can go for deemed cost. Alternatively, you can go for deemed costs. Okay. Now, when I go for deemed cost can be categorized into two types. First one is previous gap carrying value. previous gap carrying value or fair value. Previous gap carrying value or fair value. Okay. Previous gap carrying value means what? You will look at your fixed asset register, for example. Fixed asset register में क्या रहता है? Gross block, accumulated depreciation, net block. So when I talk about previous gap carrying value, you basically will end up taking the net block. You will end up taking the net block. Okay, is it clear, everyone? Yeah, is it clear? You will end up taking the net block into your fixed assets. Okay, for the purpose of transition. So what normally we do when we converge is the accumulated depreciation is a separate account. We debit that account and transfer the entire balance to the gross block. So my asset balance will start with on 1st April on the date of transition, which is normally 1st April. Your opening value of property, plant and equipment, the gross block will be the WDV. Opening accumulated depreciation will be 0. Opening accumulated depreciation will be 0. So basically how it works is, under AS, you had cost, accumulated depreciation, WDV or carrying amount. So if this was 100, this was 20, WDV will be 80. When I do this transition to Ind AS on the date of transition, cost, accumulated depreciation, WDV. So on this date, the cost will become 0. The cost will become 80. Accumulated depreciation will be 0. WDV will be 80. Okay. We don't take cost and accumulated depreciation together. We take the net book value. That means you need to pass a journal entry nullifying your accumulated depreciation and adjusting that balance against the gross block. Okay, because Ind AS 101 tells us the net book value will be your what you can say previous gap carrying value. So you bring it forward. This is your deemed cost. So cost column is the gross block. So cost column will actually be the WD. Are you clear with this? Yes. Or you could do a fair valuation. Of the assets. Okay. Now, shall I rub this? Yes. Are we clear with this? Yeah. Property, plant and equipment. Are you clear? Anybody has any doubts? Yeah. No doubts. Okay. So now coming to the previous gap carrying value and fair value. Acha. Now, ideally, you should ask a question which you did not ask. Okay. Sir, I don't go for previous gap carrying value. I will also not retrospectively follow Ind AS. What I will do is I will do the transition at fair value. Okay. Sir, if I do the transition at fair value, will it be a revaluation that we studied in Ind AS 16? Answer is no. This is not fair value. This is not application of revaluation model as discussed in Ind AS 16. This is not that value. Okay, this is not application of revaluation model. This is only starting point of Ind AS. means you take this fair value as a deemed cost and continue the fair value in the future. It means you are following the cost model under Ind AS 16. Don't get confused. This is not a revaluation model. This is a starting point. यहां से मेरा Ind AS start होगा. From this point, my Ind AS will start. And going forward, what is your policy? You will have to mention. So whether you take it as previous cap carrying value or fair valuation, it is not any change or revaluation policy, etc. Okay, it is just a starting point that is there. It is just a starting point that is there. Okay. Subsequent. Subsequently, fair value, is it permitted? Yes. Is it permitted to continue at the cost, which is the fair value on the date of transition? That is also allowed. You cannot say मैंने एक बार fair value किया, then every time there is a requirement for revaluation, I have to do the revaluation. No, this is the deemed cost. This is the starting point. You continue with this in the future, it is perfectly acceptable. It will be application of cost model under Ind AS 16. You want to do a fair valuation and take the difference to your revaluation surplus because you feel it gives a better picture. That is also fine. That is also perfectly fine. Are we clear with this? Yes. So in the future, whatever you do is permitted by Ind AS 16. Ind AS 16. Okay. This is only starting point on this one. Only a start point for moving to Ind AS. Only a start point for moving to Ind AS. This is not revaluation model. See, look at the words. It is a deemed cost. It is a deemed cost. So on the date, see, on 31st March, the value is 100. On 1st April, the fair value is 120. You have two things, three things in fact. Either you go to the past, restate the cost, arrive at the depreciated value, that is this option. Okay. You have a second option, sir, 100 को 100 में लेकर आ जाओ. So that is the second option. Third option is on the date of transition, you revalue this. But it is not a revaluation under Ind AS 16. Galati mat karo. This is not revaluation under Ind AS 16. This is revaluation for the purposes of applying or for the purpose of adopting Ind AS. Iske baad, if you want to continue 120 as the cost, please continue. Go ahead. There is no problem because this is the application of the cost model. If you want 120 to go to 140, 170, etc., depending on the fair value, please do it. Then in that case, this is known as the revaluation model. But on the date of transition, changes in value is not yet Ind AS 16 because उस date पे तो Ind AS में थे ही नहीं आप. You were not even there when you are shifting this value from cost to fair value. Okay. Fair value on that date. Fair value on the date of transition. Okay. Difference will go in your opening retained earnings, or if there is a revaluation surplus, take it there. No problem. Difference typically goes into your retained earnings. Okay. Difference typically goes into your retained earnings. अगर आप revaluation में डालना चाहो, बेशक revaluation में डालो. Nobody is going to question you. Okay. Fair value on the date of transition. Fair value on the date of transition. Previous gap carrying value. Okay. Fair value on date of transition. Fair value on the date of transition. Are we clear with this? Yes. Anybody has any doubts? Yes, no doubts. Okay. So that kind of clears your third one, that is uh, property, plant, and equipment also. Okay. So now I want you to try. I'm closing the session. I have some, I told you today will be a small class, but Saturday will be a longer one. Okay. All right. Now I want you to try illustration 12, illustration 13, then question 3, homework. Illustration 12, 13, and question 3, they are all dealing with FCMI TDL. Read very carefully. The questions are all similar, but they are not. If you read the language, आपको लगता है सारे क्वेश्चन एक जैसे ही है सर, but वैसा नहीं है. Okay, so read the question once, twice, thrice, and try to do it. Okay, I will definitely run you through those questions on Saturday, but if you do it, it will be helpful to you. Okay, question 3. Then after this, we then move on to uh, सर्टन फूड फॉर थॉट. खुद के दिमाग को थोड़ा कष्ट दे दो. ओके, ट्राई टू डू दिस फॉर होमवर्क. Okay, try to do illustration 8 for homework. It relates to property, plant, and equipment. Then you try to do illustration 9. क्या है? Yeah, homework. ये तो 2 लाइन का है. You will be able to do that. Okay, all right. Next. Okay, all right. Homework. Okay, so try these questions for homework. Most of it is theoretical in nature, should not be taking much of your time. So therefore, I think you are in a position to do this. Okay, and apart from this, you guys have any doubts or difficulties? Please let me know. Okay. Anyways, we have covered 3 major things today. That is ESOPs we covered in detail. Then we saw the second one, that is foreign currency, and the third one we saw was property, plant, and equipment. Then we are having business combinations, compound financial instruments, your loans at below market rates, and estimates, NCI. That's about it. Okay. So these are the major ones which are left. So I think on Saturday, at least if I can broadly touch up base up with you upon the theory in detail, and these small questions, I think we are almost good to go with the understanding of 101. Then there are a couple of big problems which are there. We can see that and close the session. Okay. So anyways, thank you guys, and sorry for closing the session early today. Yes, I am having some uh, I'm having some work, I told you. Okay, so see you guys, and take care. Today I left you early. On Saturday, don't ask to break. Okay, on Saturday will be a heavy duty session. Sunday also will be a heavy duty session. Okay, but we will do that. Okay, yeah. Chalo. Thanks everyone. Take care. Do the homework what I have told. Okay, do the homework what I have told, so that we can then be updated. Okay. Was it okay? Are you able to understand the transitionary provisions? Yes. In DS 101, are you guys comfortable? So far, at least whatever we have done. Yeah. All right. Fine. Chalo. Thanks. See you guys. Take care. ओके सर, सेशन आप क्लोज कर सकते हो।